If you wanted a single metric to determine how well the market is doing in the Greater Toronto Area, you can just focus how many sites or construction sites are being set on fire every single month. The more fires that are being set, the more desperate people are, the more dire the situation is. And as of the recording of this video, I think we've had 2 or 3 fires set in the last 7 to 10 days. Usually during 2023, we were running on average at about 1 fire or 1 subdivision being set on fire every single month. Now things are escalating, and it's pretty indicative of what's happening in the actual market. Someone on Twitter actually decided to start tracking these. It's this account right here, John Flynn, and this is just a partial summary of what we have. So based on what I know, I think we've had 13 fires in the last 12 months. And recently, just in the last, I believe, 7 or 8 days, we've had 1 more in Barrie, another one in Burlington, and that's just what I've been keeping track of personally. Yeah, the situation's pretty dire, and it is indicative of what is happening in the resale market as well across the GTA. My name is Vassil, and I'm a real estate broker right here in the city of Toronto. As always, I will cut through all the noise, just give you the relevant stuff you need to know so that you can better understand what the market is doing right now. If you like this video and you like this type of content, please subscribe to the channel, like the video, and let's get into it. As always, let's dive in with price changes for 2023. This is the one that everybody looks at in terms of how median prices are behaving in 2023 relative to seasonal norms. The thin black line, the seasonal norms based on 15 years of data right here, and the dotted black line, the thick one, is 2023. So quick recap, we had big price appreciation in the beginning of 2023 due to lack of inventory, where we saw prices shoot up 16.5%. And in the summer, everything fell flat on its face. Prices dropped roughly 11%. And then in the fall market, we had a bit of a rebound, but as you can see, we were significantly lower than where we should have been based on trends. So price appreciation year to date for the fall market should have been at about 12.38%. Ours right now, as of end of October, was 8%. Here's where things get very interesting. Typically, based on 15 years of data, prices stay relatively flat between October and November. And here's what's happened in 23. We had a massive slide in prices going from 8% year-to-date appreciation to 4.5%. So basically, we've lost 3.5% of price appreciation in the median price going into November. And typically, this decline in pricing doesn't start until December, and it's very aggressive. So if I was a guessing man, based on what I'm seeing right now, this is going to further continue, and we may actually end the year probably at very little to no appreciation. And maybe if things get really bad, potentially could go negative. I don't know. I don't think it's as important as the trend that's developing right now. There is some good news here. I'll get to that in a bit. But that is the concern right now. Anybody active in the market, I mean, in October, I had a very slow month. I was able to firm up some deals in November, which was a little bit better, but not by much. And I don't see December being a good month. Typically, this is when I like to go shopping for myself, because this is when you get some of the best deals. So let's get into the good news. I know everybody's talking doom and gloom, but there are some good news here. I mean, it depends on which side of the equation you're on, buyer or seller. But in September, I had to renew my own mortgage, and I believe I actually made 2 videos on it. And I was originally going to go with a variable rate mortgage based on my calculations, the risk premium, the 5-year bond yield, all that good stuff. I determined that a variable rate mortgage is likely going to be cheaper, but before renewing, based on wawa.ca, which is a great website, actually, they have some really good information. I thought that between risk premium, 5-year bond yield, all that stuff, I'm probably better off going with a fixed, simply because the gain from going to a variable is just not big enough. I might save, 10, 20 basis points over the 2-year duration of my mortgage, but it's probably not worth it. So I went with a 2-year fixed, 599. And then what happened is I had a bunch of buyers that were actively looking at the time, and everybody kind of got out of the market because they had their rate holds expire, and they had to get new rate approvals at, 6.3, 6.4, 6.5, depending on which fixed product they were looking at. And that is a reflection because of this. So the 5-year bond yield basically went shooting up into October. It stayed pretty high in November, and then it started dropping. And guess what's happening right now? These same people are their rate holds are expiring with these high rates, and they're getting much better mortgage options right now. So guess what's happening? A lot of the buyers that are on the sidelines are coming back and becoming a lot more active, because they basically regained some of the old purchasing power that they had lost. And what's working to their benefit is prices are also going down, so that's why they're getting more active. Now, I want to make something very clear. From where I stand, somebody representing sellers and buyers, for the Toronto real estate market, there's always demand. It's not like buyers just don't want property. Just sometimes what happens is you have buyers that are very reluctant. Nobody wants to buy at the top of a market or buy and then the property is worth a lot less than what they paid for. So obviously people are reluctant. What's interesting is that the demand is still there. It's just there's more discipline with buyers. But now that I see rates coming down, I'm starting to see buyers get more motivated to jump in. And they're not as worried in terms of what happens with the market, because usually they cite two things. Once we go into the spring market next year, they expect prices to go up. I don't know if that's going to be the case. And because they feel that they're regaining some purchasing power back, sentiment is improving, that, maybe rates are now going to stop increasing and maybe they're going to be flat, maybe they're going to start going down. And that is why you're seeing some buyers come back, especially in the last week to 2 weeks, which I have personally felt and a lot of my colleagues have as well. What that will translate to, I don't know, but it seems like there's some positive sentiment, and this entire market, in my opinion, generally trades on sentiment, not fundamentals. My only warning here is that prices are still pretty elevated. So the prices we're still seeing right now are as if rates are 2%. Rates are not 2%. You're still going to be paying 5-6%. And prices don't reflect that discount that you need in order to make this whole thing work. So just buyer, be aware, understand that. And for sellers, also understand where buyers are coming from. If you want to get a deal done, you have to compromise. Now let's get into some more interesting data in terms of what's happening trend-wise. So the red graph right here, the thin red line, these are the new listings that are coming on the market, and the dotted thicker red line are new listings for 2023. So as you can see, right around June, July, we started actually following trend. And this is why I always emphasize to everyone, it doesn't matter if listings are going up or down. If you don't know what the trend is, you're really basically blind. You have no idea what you're talking about and how to interpret the data. So right now, listings are going down, and it's matching pretty much what the 15 years of trend data are telling us. What this is telling me, or the way I interpret this in this market, is if new listings are actually going down despite us having very or record low sales, that means that sellers have the ability to hang on to their properties, and you don't see as much distress as we would have thought. So there's obviously distress happening in the system right now, and I can anecdotally tell you there are a lot of deals to be had, especially properties that need work, condos, expensive condos, tons and tons of deals. I'm talking you can get double-digit percentage discount to most recent comps if you play your cards right, if you're working with a good broker that knows how to negotiate these things with tact. But that's the new listing side. But here's what's happening on the transaction volume side. And this is where the story, I've been saying this all of 2023, this is where our problem lies. Typically, based on 15 years of data, in November, we were supposed to sell roughly 7,000 homes. We've only done 4,200. And this has been piling on since roughly July. So effectively, we're selling 50 to 60% of what we usually sell to trend. What that means is a lot of sellers have to terminate, relist. And that basically wears them out, and this is how discounts happen. If this continues, so for example, if in December we see a massive drop-off in transactions, I think the winter market is going to be very difficult for sellers. Although based on what I just said earlier, with mortgage rates kind of coming down and sentiment changing a little bit, I wouldn't be surprised if actually transaction volume stayed flat or decreased a little bit. So it was improving relative to the trend we're seeing right here. And what about active listings? Well, everybody was talking about, active listings are going to go through the roof, and people would cite that inventory is going up, but they wouldn't give you the trend or what's happening because they just don't have the data, or they don't understand how to interpret the data. But here's the data for you. 15 years of trend, and here's where active listings are right now. So typically in November, we're supposed to have 14,700 active listings. We have 16,759. In the grand scheme of things, this is an issue, but it's not as big of an issue as people make it out to be. And what's more important is it's actually following trend. So we're actually decreasing. Where I started getting concerned is right here in September, where active listings are supposed to go down and we had an increase. So this shows divergence in trend. And I wouldn't be surprised back then. I wouldn't have been surprised if this actually started going up. But this just goes to show that Toronto and the GTA real estate market is pretty resilient. Most people can figure out a way in terms of how to hang on to their homes and not have to sell in a down market. That is not to say the market is in good shape right now. I've said this before. Sellers right now have absolutely no leverage. All the leverage is with buyers. And the longer this continues on, the more and more sellers are going to get beat over the head with these lowball offers. So you have to really make a decision for yourself how much risk you can take on. Right now, the only stuff that's selling is something that comes from the market, that is desirable, that is well put together, that's well marketed, that is clean, and people have proper and realistic expectations. If you're coming on the market, testing the waters, looking at these random prices, or if a realtor told you you can get some old price, or you beat the realtor up and said, I want this price from not selling, I don't even know why they took your listing. You have to be realistic, because if you're not coming on this market, for example, if somebody, I've actually had a listing appointment where somebody told me their price expectations, I basically had to end the appointment early. I said that you're not getting that. And they're like, well, other realtors told me that this is what I can get. And you know what? By all means, use those realtors. I'm not the person for you. You're not going to sell this property. You have to be very realistic. You have to be very pragmatic. This market is very different from the years and years of where sellers held all the leverage. Things have changed. Be realistic and understand that the market is very fluid. It's changing by the day, and it's all driven based on sentiment. With this, if you have any questions, please feel to reach out. I hope you enjoyed the video. Please like it, subscribe to the channel. I'll see you in the next one.